7 dividend paying ETFs that pay for my mortgage every single month consistently. Now, even though as of right now, as a 32-year-old dividend investor, I'm not at the point to where I'm using my dividends as of right now to pay for things like bills, expenses, etc. With my $7,500 plus per month though, as I'm earning now on average every single month throughout my portfolio, I am to the point to where I could in fact pay for things like my mortgage or other expenses, etc. And because my longer term plan is to use this portfolio to pay for things like expenses, that's partially why I do own some higher yielding assets in this portfolio, which you don't necessarily always find in younger investors' portfolios. So in this video, I'm going to go over 7 different ETFs and stocks that are going to pay for things like my mortgage, and then some when it comes time for me to retire, say in the next 2, 4, 6, 8 years. Every single one of these different positions, whether it's a stock or ETF, have a long track record of paying out dividends and also offer a total return, which is positive historically. So if you want to see which 7 ETFs and stocks are going to pay my mortgage sometime in the near future, make sure to stick around, drop a like down below, and let's get into the first one. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now, the first ETF that I own a ton of, and that's definitely going to help me out pay for things like expenses, my mortgage, etc., is QYLD, the NASDAQ 100 covered call ETF. Now, I personally have owned almost 3,000 shares of QYLD for several years now, and although this ETF has not been the best performer across my entire portfolio or across the entire stock market, it has done pretty decent over time, and with almost 3,000 shares in my portfolio, the monthly distributions that I've been paid consistently over the years have been reinvested into more shares of different stocks ETFs, which has definitely helped build out my portfolio over time. Now, right here on the Global X ETFs website, it says why QYLD. In case you guys are interested, it says QYLD seeks to generate income through covered call writing, which historically produces higher yields in periods of volatility. And because of covered calls, I do think there's so much potential now to earn a lot more income throughout the market than there would be by just investing into regular stocks and ETFs. Now, because this ETF also pays a distribution monthly, which is somewhere around 16, 17, 18 cents per share per month, the amount of income that I've been receiving consistently on a monthly basis is definitely going to help pay for expenses later on. Now, like I said, this is not my favorite ETF. I actually haven't even bought any more QYLD in a long time. But like I also did say, I have held onto it for years now. And honestly, the distributions have been quite nice. The next position that's going to help me pay for things like my mortgage and or other expenses on top of that is one of my favorite monthly payers. I'm talking about Realty Income, which I currently own around $150,000 of across my portfolios. Now, I probably don't really need to explain to any of you what Realty Income is and how it works, because if you're a dividend investor, I'm sure you already own shares of Realty Income in your portfolio. But Realty Income is one of the largest real estate investment trusts with almost 15,500 properties. This is a behemoth of a REIT. Realty Income also does pay a dividend monthly. I've been getting paid Realty Income dividends for as long as I can remember now. And Realty Income, fun fact, was one of my first ever dividend stocks I added to my portfolio right when I started investing in Robinhood very, very long ago. Realty Income has offered around 14% compounded annual total return and has not only paid dividends consecutively for 653 months, but also Realty Income has continued to raise their dividends over the years, which, because I own so many shares of this one, it definitely adds up to quite a pretty penny when they do offer a nice juicy dividend raise. Now, it's kind of funny about owning shares of Realty Income because it is real estate. Realty Income, the shares that I own, actually help pay for my real estate that I also own, or definitely will help me do so in the future. Realty Income is one of my favorites, a very reliable monthly payer, which I'm going to hold long into the future. Another more income-focused asset that's definitely going to help me pay for my expenses later on, and then some hopefully, is JEPQ, the JP Morgan NASDAQ Equity Premium Income ETF, the ETF that tracks the NASDAQ and then with cover calls offers investors anywhere from 49 cents upwards to 55 plus cents per share on a monthly basis. Now, even though JEPQ doesn't pay the exact same amount every single month, which is kind of annoying because if I do want to use JEPQ to pay for things like bills or my mortgage in the future, I'm going to have to do some stashing away of cash balance, etc. But JEPQ overall has still offered a massive yield of anywhere from 9% to 12%, depending on when you bought into it. Now, another ETF that I'm going to be using to pay for a lot of bills, hopefully in the future, is one of my larger positions, SCHD. I currently have over 2,200 shares of this one, which means with the amount of shares that I have, plus the dividend growth, hopefully in the future, this ETF could at some point long down the road be one of my biggest payers in my entire portfolio, hopefully. Now, SCHD, of course, tracks the total return of the Dow Jones US Dividend 100 Index, which offers exposure to dividend stocks that have a history of growing dividends on top of that. And even though SCHD doesn't pay the biggest dividends from day one, because of that dividend growth rate, which I've talked about so many times in different videos, I'm hoping that, like I said, long into the future, whether I have 2,000, 3,000, 4,000 shares, I'm hoping to be making a pretty penny off dividends when it comes to this one alone. Now, what's also awesome about SCHD, and one of the reasons I love this ETF, is that even though it pays a decent yield and offers massive dividend growth, this ETF also has grown over time, making a lot of us investors that own this one up significantly on our shares. So this ETF is definitely going to be front and center when the day comes that I'm using my dividends to pay for things like bills. Another ETF that I'm definitely going to utilize to pay for things like bills, and I've been building out a position in consistently this year, is SPYI, the NEOS S&P 500 High Income ETF, which offers a distribution rate of over 12%. Now, with this over 12% distribution rate, what's awesome about it is you don't have to invest millions of dollars or hundreds of thousands of dollars to receive a massive amount of income every single month. Also, in the context of this video, paying bills or paying your mortgage or even rent with dividends and distributions, SPYI pays more or less the same exact amount every single month, which is very helpful, especially if you're trying to do something like set aside a certain amount of shares to cover a bill, such as your mortgage. Now, as of right now, I have nearly 1,000 shares of this ETF, and this is because I do really like the strategy that it uses and because I love having exposure to the S&P 500. And all in all, this ETF is probably going to be one of my most important positions when it comes to paying things like bills in the future. Another one of my largest positions, an ETF that I've owned for a while but haven't really bought any more shares of as of recently, is JEPI, or the JP Morgan Equity Premium Income ETF. Now, JEPI offers a little bit smaller of a yield as far as some of the covered call style ETFs, although it actually has grown over time pretty nicely. Now, JEPI of course gives you exposure to the S&P 500, and with implementing written out of the money S&P 500 index call options, the ETF, just like the others, offers much bigger distributions and dividends than normal. Now, with JEPI, we're talking anywhere from the mid-20s to 40 cents per share per month, which isn't massive, but I have to say, over the time frame that I've owned JEPI, the ETF has done pretty well. It's made me some money, and I can't really complain. And with that, I will definitely be holding on to JEPI and utilizing this cash flow when it comes to time for retirements. Now, last but not least, because I am probably going to be using a lot more stocks and ETFs to pay for things like my mortgage and even other bills in the future, but another one that's sort of front and center that I'm building out as of right now to do so is ticker symbol DIVO, or the Amplify CWP Enhanced Dividend Income ETF, one of my favorite more dividend income focused ETFs across the entire markets. Now, DIVO has a pretty cool strategy if you guys aren't aware. DIVO buys into a small basket of holdings, around 27 different stocks as of right now, and then a actively managed portfolio manager then uses cover calls and other option-oriented strategies to earn a ton of income for investors. Now, the distribution rate for DIVO is around 4.88%, which is not bad whatsoever, and this is specifically because this ETF has been trading upwards for a long time now. Now, as far as income potential goes, especially high quality dividend income potential, this is one of my favorite ETFs that sort of does it all. DIVO is definitely an ETF I'll be using later on. So those are just a few of the many different stocks and ETFs that I currently hold on to in my 7-figure portfolio that, like I said, I will be utilizing without a doubt in the future to pay for things like my mortgage or even other bills on top of that. Now, if your goal is not to use your portfolio to pay for things like bills in the future, if you want more growth potential, well, the good news is there's different stocks and ETFs across the market that can offer that also. But if you're more of an income focused investor and want to earn dividends and distributions ASAP, well, definitely subscribe to my channel because I talk about tons of the ETFs and stocks that can definitely get you there. But now, lastly, most importantly, before I go, I want to hear from you guys down below. As far as using dividends and or distributions to live off of in the future, what's your number one favorite stock or ETF that you're buying as of right now in hopes to do so? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.